if you look at the last 20 years, as yields have gone up, because there hasn't been inflation in the system, gold has been pushed down, right? Because it's more of a risk on trade. We have seen a little bit of a decoupling with that, because if you look at where yields were back in June or July, yields were much, much lower. We've seen yields get as low as about 1.2 to 1.3% on the 10-year and then push back to about 1.6 to 1.7% more recently. And in theory, over the last 20 years, gold actually should be down much, much more due to that push, and it's not. And what I think the market is sniffing out here is that you do have inflation creeping in more and more. The Fed has even said it's not so transitory anymore. We're looking at supply issues. We're looking at just overall inflation with wages in the U.S. especially. And I think what you're seeing here is that accumulators are starting to step in on every dip. The people that know that gold is going to have kind of a rocket ship effect eventually. And what I'd like to do is hearken back to the early to mid 70s period. So remember, between 75 and 85, you had a lot of inflation in the system, 1975 to 1985. If you go back to the early portion, gold was a big underperformer there, even to about the mid 70s. And then really towards the later portion in the 70s, where inflation really got sustainably, excessive, gold took off dramatically. So if you look at the price action of gold, everyone's bearish on gold. Oh, it's not sexy anymore. It's not going to perform because you have Bitcoin, interest rates are going up, so gold should go down. Well, yeah, interest rates going up in a deflationary or no inflation environment cause gold to go down, but we're starting to enter a new phase. And I think that gold is preparing here for a big dramatic move to the upside. Just to give you guys a sense, I'm looking to buy more physical gold myself. I've been investing in things like GDX and the GLD recently, and I'm getting ready for a bigger move up that I think will come over the next 6 to 12 months in spot prices of metals overall, but specifically gold. I think you have to look at it and say, well, equities are at all-time highs. Usually gold would be even down even more because it's kind of the risk on trade is going into equities versus gold. The fact that gold has even performed as well as it has over the last year and a half, to me, it's telling me that there's a lot of liquidity in the system, that probably smart money is accumulating as well, which is keeping it from really dipping back down. The average investor, by the way, let's be clear on this. The average investor is not willy-nilly buying tons of gold, right? They're in stocks, they're in Tesla, they're in Bitcoin, they're in, the sexier names out there. So if gold isn't going all the way back down to where it was trading, at 13, 1400, 1500 prior to that big move, it's got to be telling you that you're getting some buyers, some big significant buyers in the picture here. And again, big institutions are the ones I want to follow. Overall, I think that inflation is going to stay hot for years to come. I think you'll be looking at 4 to 5% minimum for probably the next 5 years. And I do think that eventually, when Bitcoin kind of loses its luster, when the stock market actually has a serious correction of more than just 5 or 10%, people are going to look and say, okay, well, where do I put my money? We have so much money now in the stock market, in other assets. Where are we going to go? And I think gold is that recipient, in my opinion.